Hey traders, welcome back to another YouTube video. So one of the questions I wondered a lot when I first started trading, especially my first and second year, and I also get asked very often is, hey Neil, what kind of expectation should you set? So when someone asks me this kind of expectations related question, the first thing I ask is, what do you mean by expectation? Do you mean by the monetary expectation, which means how many percent you're looking to make in a month, in a quarter, in a year? Or do you mean by how much capital you're trying to achieve by when? It could be personal capital, it could be profit capital, different thing. Growth can also come in personal growth, which means your mindset, your skill set, your discipline, your routine, and etc. So whenever I get asked this question, I feel like it is really a very subjective topic, I'll tell you. But I believe for majority of traders, what they're really trying to ask is, hey Neil, if I were to put in all of my effort, how much money can I potentially make by when? Exactly when? Most of the people, they want to know the exact timeline. Hey, by my second year, can I make 100k? By my second year, can I make 200k? And trust me, I've been in the market for quite many years, nearly 6 years now, and that's probably one of the most detrimental mindset, definitely very damaging in the long term if you keep forcing the P&L, if you keep forcing the percentage growth on your capital. Especially most of the traders that fail, that struggle a lot, tends to be traders who have way too high expectation on themselves. I'm not saying that having high expectation is bad, but in general, if let's say the way you approach the market is, I want to make 10k this year, I want to make 50k this year, trust me, lots of times market will either surprise you or it can be extremely disappointing to you as well. I remember on my first year, I told myself within a year I have to be a consistently profitable trader. And guess what? I failed miserably. I did make a bit of money here and there, but it wasn't consistent. If I look at my equity curve, it goes like this, then dip all the way down. Let's say you're lucky enough to have your first year closing positive. For majority of traders, they as long as they close the year positive, they close the month positive, they will start acting like, oh, I'm the god, I'm the market wizard, I can do whatever that I want. But trust me, you are never the god, you are never the market wizard. A market is just a matter of time where the market humble yourself. I can say a proper way of setting up your expectations, whether if it's personal growth, whether if it's monetary, whether it's capital, the best way to approach it is to always seek for some sort of disciplinary growth, disciplinary expectation. By end of the year, for example, I want to make sure I only stick to 2 pairs. I stick to my maximum drawdown per month, per week, strictly by 3% max. I stick to this specific pattern for 3 months to half year. I stick to this specific routine for half year. When you start enforcing all of these disciplinary and especially routine-based expectation, you'll start experiencing immense growth. What I'm saying is, because instead of being one of the 90%, 95% of struggling trader who keeps looking at the money, you are focusing on the process instead. I know it's typical, lots of gurus will always say focus on the process, not the outcome. It's a common norm. It's a very normal thing to say. But what I'm saying here is a little different. It's not wrong to focus on the outcome. I'll be honest with all of you. As a human being, especially if you are an aspiring trader, seeing no results, seeing no growth on your P&L can definitely be very disappointing. I've been there. I know how does it feel to be putting 15 hours a day, 18 hours a day, 70 hours a week, but still see zero progress. But one thing you fail to recognize is that growth, especially in trading, if we're talking about a retail business, could be a restaurant business or any sort of physical business, The growth is very, very trackable. The growth is very, very measurable. But in trading, it's a funny thing. Sometimes you can make zero money this year, you can make small money next year, and all of a sudden on your fourth or fifth year, you just make 100K, 500K. That's not because of luck. Lots of time that's just because on that specific year, you have the breakthrough. In business, it's a very different thing. Because you see, in trading, your hard work, your effort does not necessarily equivalent to the outcome. The wings are sort of tilted. Sometimes you put in so many hours, 15 hours a day, just looking at the chart back testing, but you still see no result. Why? That's because something haven't really clicked. It could be as simple as you are. One of the common thing I realize is lots of traders, they think they're working hard, but they're not working smart. They are trying to learn different strategies, 5 to 10 strategies all at the same time, trying to learn different patterns, different terms, ICT, SMC, price action, harmonic patterns. Once you start learning way too many things, you are not actually, it doesn't really benefit your edge. It doesn't really, a better way to say this, you don't even have an edge. A successful trader or any consistently profitable trader, I've said this a lot of times to my trade club members, they have one specific way, a very stubborn way of looking at the market that is really giving them that one edge, that one positive edge that allows them to consistently extract profits from the market. You don't need to learn 10 different strategies. You don't need to have like 10 different patterns. All you need is one thing. Be good at 1 to 2 patterns that can just allow you to survive, let's say, be profitable 7 to 8 months of every single year. And that's it. For the remaining 4 months or 5 months, you can stay flat, you can stay small loss. As long as there's no big damage to your account, there's no big loss month, you are already a profitable trader. And that's what you should be approaching. That's what you should be expecting as well. Don't approach the market in a way that, you think, oh, profitable trading is all about closing 12 months every single year positive. It's impossible. Every single year, according to my own data, my best performing months are always between January to June. Then lots of times from June to August, I'll have some sort of holding on my P&L. Everything just sort of moves sideways, stops a little bit, and after the end of the year, it'll pick it up. It'll start picking up again. That's sort of the patterns that I realize on my equity. The same goes to all of you. If you're trying to master every single market condition by setting the expectation of I want to be profitable every single month, I want to make an average of 5% a month, it's impossible, I tell you. That's why trading, we use the terms average. You can be losing 3% this month, you can be losing 5% the next month. The main goal is, are you able to bounce back strong? Your ability, your agility to sort of bounce back from the drawdown will determine how far you go in trading. So if, let's say, you lose 3% this month, you lose 5% next month, you lose 10% next month, you can't pick it up, you can't sort of suck up the emotion, everything just seems to be so overwhelming, you get depressed, you got that anxiety. That's when traders go self-sabotage. The drawdown goes like this. It's pretty healthy. So lots of time people just have the false expectation of being a good trader is all about that constant rally on your equity curve. The answer is no. If you really look at all of the profitable strategy of the really nice portfolio, you realize that they will often have that small sort of a slump on their equity curve, the temporary hold or a slightly deeper drawdown, but it eventually leads to a nicer rally. That's because on certain seasons, on certain months, your strategy just doesn't perform that well. And another thing that I realize people are taking it the wrong way is they think, a loss is a bad trade. No. A loss can be ordinary, because you see, trading is like a business, right? Every business requires overhead expenses, operational costs, etc. Sometimes when you have some sort of losses, it is part of the game. It's part of the probability sequence. All right, because probability is pure random. So lots of times when you take losses, don't always see it from a negative way. So what I realize is most people, when they have that losses, they say, I'm in a bad season. You're not in a bad season. You are in some sort of testing season. Market is trying to test your risk management approach. If you can survive through the drawdowns, let's say it's a 3 trade, 5 trade, 10 trades drawdown, what's waiting for you on the other side is a nicer pump on your equity. Guess what? Most people, when they lose 1 trade, 3 trades, 5 trades, they go completely self-sabotage. They start overtrading, revenge trading, over-risking, not having a proper risk management, don't protect the capital, and just go completely to the south. What you need to do is when you lose 1 trade, 3 trades, 5 trades, as long as you know all of these positions are within your risk management approach, sort of within your risk parameter, that within your patterns, your strategy, your playbook, what's waiting you ahead is another nice pump on your account balance. So hold on, stay patient, wait for the next big wave to come. That's what I always do. When I have some sort of drawdowns, whether it's 5 trades, 7 trades, I know what's waiting for me on the other side is some very, very beautiful positive P&L. Once I start engineering this positive self-talk, positive thinking, all of a sudden drawdown gets a lot easier to be managed. It gets a lot easier to handle because I know this is temporarily. I know in order for me to become profitable, I know in order for me to make the next big trade is to survive through this period of drawdown. So once you understand that your primary focus now is to survive the drawdown, there goes you protect the downside. That's what we call capital preservation, like capital protection at all cost. So I hope this video enlightened you, and I hope this sort of brings up what's the right thing to do when it comes to setting expectation, and also how can you manage drawdown, because good traders are the best risk manager, and also at the same time they have the best adaptability. When they realize something is wrong, they still accept the loss. We take the loss because it's ordinary, right? In order for you to become profitable, you need to learn how to take losses. Like Tom Hogarth say, the best loser win, right? You need to accept losses, embrace failure, embrace that the market would often try to pinch you a little bit, punch you a little bit, proving you wrong, but it's fine. I always tell myself, I don't care if the market proved me wrong, as long as I get paid, it's fine. Alright, if you want to punch me in the face, punch me in the face, it's fine. As long as I get paid at the end, that's my goal. Alright, so that's it for the video. I hope all of you enjoy it. Take care, trade safe, and bye-bye.